our teacher. We are Group 6 and now we will present the financial analysis of Tom Nam Kim Company. First, let's take a look at our table of contents. First, we will talk about the introduction of the company. Then we will talk about the balance sheet analysis and the net income analysis. After that, we will analyze about the ratio, and finally is the conclusion. So now I'm Han. I will talk about the introduction of the company. So Nam Kim Steel Joint Stock Company, Nagisco for short, is one of the largest steel and galvanized steel production in Vietnam. Its headquarters is in the New Province and one of it is in Ho Chi Minh City. There are three factories, two of them are in Bình Dương and one is in Long An. Nam Kim was established on the 23rd December 2002 in Bình Dương Province. And they have three majority-owned subsidiaries. Two of them is the Steel Pipes Limited Liability and one is the Paper Vietnam Limited Liability Company in 2021. Nam Kim and its subsidiary produce products that are applied in the fields of industrial and civil construction. So what do they produce? They produce galvanized steel, color-coated steel, industrial cold sheets, and the steel pipes. In the Ho Chi Minh Stock Exchange, they have the ticker symbol which is NKG, and the independent audit firm is the PricewaterhouseCoopers, one of the big four. So now let's see their shareholder structure. It divides into three main parts. The first is the board of directors, the board of supervisors, and the board of management. So as you can see, the table here, Hồ Minh Quang is the chairman of the company and he holds the largest, which is 10.74%. Second largest shareholders is the Unicor Specialty Chemicals, 5.88%, and third is the SMC company. Now I will talk about the market share and the competitors. Nam Kim is one of the largest producers and supplies with galvanization capability and steel pipe production capability is more than 1 million tons and 200,000 tons per year respectively. So, as a result, Nam Kim is increasingly expanding its scale and improving the production process that has helped Nam Kim become more competitive in the galvanized steel and steel pipes market. According to the chart of the galvanization market, it is clear to see that despite not having the biggest proportion, Nam Kim is still close to other two big competitors which are Hoa Sen Group and Tom Dong An. In particular, the percentage market share for Hoa Sen Group and Tom Dong An is 25% and 17% respectively, while the number of Nam Kim is just 18%. Now, my friends Nhật and Fact will continue with the balance sheet analysis.
Now let's move to the balance sheet analysis, which will be analyzed by me, Thanh Nhật, and Việt. Overall, there was a slight decrease in the total assets in the last 3 consecutive years. While the non-current assets decreased from 2018 and 2020, the current assets increased constantly in the last 3 consecutive years. And as a result, the difference in current and non-current assets had grown out over time. When we look at the current asset, it has a constant growth between 2018 and 2020. Nam Kim's inventory accounts for the largest proportion of the current asset. The large proportion of inventories come from Nam Kim increasing the capacity of factories and stockpiling for market expansion. In 2020, the amount of cash and accounts receivable increased significantly, which will be indicated that partly amounts of inventories have been transferred to cash and accounts receivable to increase the flexibility of the firms. Now, I will compare the inventory proportion of Nam Kim with a competitor. Nam Kim and Hoa Sen seems to have a similar proportion, higher than Hòa Phát, which is around 30%, while Hòa Phát maintains around 20% and increases gradually over years. Fixed assets take the largest proportion of non-current assets. This may be due to the characteristic of the industry, which require heavily investing in factories and raw material. The reason that the total non-current assets decreased over years may be due to the depreciation of fixed assets from 2018 to 2020. In 2019, the company spent more money in investing, which were proven by increase in the proportion of short-term and long-term investment. In 2019, the amount of money invested in long-term was over 48 billion VND compared to 9 billion in 2018.
So now we'll be continuing on the next part of the balance sheet, which is liabilities. Overall, the total liability of Namteam decreased from 2018 to 2020. The change of liabilities in 2019 and 2020 is more significant, which decreased by more than 10%. The non-current liability decreased significantly, which was at approximately 40% in 2019 and in 2020 also. Current liability takes the most proportion of liabilities and increased constantly in the 3 consecutive years, despite the fluctuation of the current liability itself. Speaking of current liabilities, I'm going to talk deeply into it. There are a lot of changes in multiple categories of current liabilities, but the biggest changes belong to taxes and other payable to state treasury, and the second one will belongs to advances from customers. So speaking of the biggest changes, which is the surge in taxes and other payable to the state treasury, and it occurred in 2019 and 2020, which is about 6,628.46%, and it increased at approximately 50 billion Vietnam dong from 758 million Vietnam dong in 2019. The reason for the major increase could be due to the limitation of COVID-19 pandemic, which causes delay in payment to the state treasury. The effect of COVID-19 could be the reason for the largest decrease in which is account payable to suppliers from 1.8 billion Vietnam dong to 1 billion Vietnam dong only, where procrastination of business operation occurs. Despite many differences between the categories of current liability between the years, the overall number only decreased inconsiderably at a surge of 5.63%. This shows a positive overview where there are not many changes over the year for the current liabilities. The next part is the non-current liability. As being mentioned above, the liabilities of Namkim Group may be restructured due to the surrounding effects. Therefore, a reduction in long-term borrowings at 39.09% is foreseeable. It was considered to be a vital yet appropriate change because the company can manage risk better since the growth of in changes of COVID-19 is unforecastable. The next part is total equity. And in this part, it is obvious that share capital's proportion always occurs more than half of the equity over the time span. But there are no changes from 2018 to 2020, mainly due to no escalation in liabilities. On the other hand, investment and development funds with retained profit increased significantly at a rate of 55.32% and 61.74%, respectively. The growth implies the success in investing and operating activities where more inflow occurs in these fields. Despite enormous upsides, the growth lacks influence to the overview where total equity only goes up by 5.44%. Still, it could be concluded that Namkim earned more revenue in 2020 compared to previous years. Okay, so next part will be covered by my teammate Bảo Ngọc.
I'm Bảo Ngọc, and I will present about the income statement analysis. In this part, there are four main terms. Firstly, revenue. As we can see from the Namkim Group financial statement, the net revenue in 2019 was more than 12 trillion Vietnam dong, nearly 18% decrease compared to 2018. The reasons behind this was that the US imposition of anti-dumping tax on steel sheet products affected the export revenue of Namkim. 2020 witnessed the net revenue slightly decrease by about 5% to more than 11 trillion Vietnam dong due to COVID-19 pandemic impacted steel productions and consumption. Secondly, we will consider the cost of goods sold. 2019 witnessed a growth in prices of raw materials due to the shortage of supply from Vale SA Group's mine collapse and the cyclone Veronica. This affected Nam Kim's cost of goods sold with an increase to about 97%. However, the firm was able to bring the cost of goods sold back to more than 92% in 2020, since the price of the steel production's materials decreased. And now is the net income analysis. Although the net revenue and interest expense fell steadily over a 3-year period, Nam Kim's net income observed a downward trend in 2019, falling about 17%. In contrast, 2020 with a more positive situations in cost of goods sold, Nam Kim was no longer left behind with a substantial improvement from more than 47 billion to over 295 billion Vietnam dong. Lastly is net earnings per share. Earnings per share declined sharply 92% in 2018 and continued to decrease 28% in 2019 because the firm issued new stock to pay dividends along with a fall of net income. Meanwhile, 2020 noticed a considerable recovery from 260 Vietnam dong to 1,672 Vietnam dong. This happened since the firm bought back 10 million treasury shares. So when comparing with its direct competitors, which are Hoa Sen and Hoa Phát, Nam Kim and Hoa Sen are nearly the same in trend over the 3-year period, whereas Hoa Phát is different with a steady growth, illustrating that the firm has more stable and positive development. Moreover, in terms of value and proportion, Hoa Phát is clearly showing the highest number among the 3, which means that the firm is able to control cost and goods price more efficiently than Nam Kim and Hoa Sen. And now I will continue to the ratio analysis. Firstly is the liquidity ratios. Liquidity ratios are an important group of financial indicators help to determine a company's ability to pay off current debt obligations without the need for external capital, including current ratio, quick ratio, and cash ratio. According to the current ratio data, Nam Kim's had a mild decrease from 1.05 in 2018 down to 1.02 in 2019, as the account payable to suppliers increase led to a growth in current liabilities. However, 2020 showed a leap of more than 7%. Over 3 years, Nam Kim maintains a current ratio over than 1, which means that the firm could cover the current liabilities well. Next is the quick ratio. Nam Kim quick ratios in the first 2 years remain stable at 0.43, while the following years, 2020, saw growth of more than 21% at up to 0.52. We can see that the firm had difficulty paying off its current liabilities in the short term, but the solvency was considered positive and Nam Kim did not rely too much on the inventory. And lastly, Nam Kim cash ratio fell sharply with a rate of about 85% from 2018 to 2019. Meanwhile, in 2020, the situation became more positive as Nam Kim's cash ratio had a noticeable improvement by over 205%. Despite that, the firm still had a 3-year period cash ratio less than 1, emphasizing the insufficient cash on hand to cover the short-term debt. In comparison with Hoa Phát and Hoa Sen, it is obvious that Hoa Phát was dominated in the 3 ratios over the years, especially in terms of cash ratio figures. Nam Kim and Hoa Sen experienced a downfall in 2019 and had an improvement in 2020, while Hoa Phát presented a gradually increase in cash ratio, which expressed Hoa Phát ability to pay up short-term debts with money or high liquid assets is better than Nam Kim and Hoa Sen. And now Việt Phát will continue with the leverage ratio.
The next part I'll be covering is the ratio analysis of leverage ratios, which refers to the company's capacity to meet its long-term financial commitments. And there are three main categories in this leverage ratio, which are total debt ratio, debt equity ratio, and time interest earned ratio. I'm going to be talking about the first one first, which is total debt ratio of Namkim Group. And in 2018 specifically, Namkim borrowed more than 0.63 Vietnam dong for each 1 Vietnam dong of its asset. The ratio went down to just more than 0.62 and 0.58 in 2019 and 2020 respectively. Despite the three closeness of numbers, there's a trend of slight resurgence as a result of minor decrease in both asset and liability over the year. And Namkim maintained its business activity well, shown by the ratio not exceeding 1, which explained that the risk is always under control. The next one I'll be talking about is debt equity ratio. And overall, this ratio of Namkim was slightly high in the last 3 years at 1.73 in 2018 and 1.67 and 1.42 in the next 2 years, respectively. And the decrease of the debt equity ratio illustrated that Namkim Group leaned toward using equity to finance its asset more. Although the ratio is stay around 1.5 for the 3 years straight, it is still considered to be in a safe range between being too secure, which is 1, and being too risky, which is 2. And the final one I'll be talking about is time interest earned ratio. In this, generally the ratio stay low between the years from 1.18 to 2.44 over the time span, as Namkim focused on partly focused on debt to financially structure the operating activities. And between 2018 and 2019, the time interest earned ratio of Namkim Group increased 0.2, which is 16.95%. The ratio went up steeply in 2020 at 76.81%, and the earning before interest and tax of the company improved, which can be implied by the growth of Namkim in general. And compared to similar categories of ratios to Huafac Steel, most of which are relatively close to Huafac, except for the time interest earned ratio, which I'll be talking about in a moment. The ratio of Namkim Group fluctuated from 1.18 to 2.44, while those of Huafac stayed between 8.22 and 19.66. The major gap in the time interest earned ratio reflects a big difference between earning before interest and taxes of the two. For the difference in interest expense is less significant. And at the same time, there are major difference in the two trends of the management of time interest earned ratio between the two big companies, as one went up steadily while one go down steeply. Okay, so the next part will be covered by Thanh Nhật.
Let's move to the profitability ratio. I listed out 3 most common profitability ratio, which are return on equity is a measure of how efficient the company is in producing profit for its shareholder. Return on asset measures how well a company is generating profits from its total asset, and gross profit margin shows the percentage of sales revenue a company keeps after it covers all direct costs associated with running the business. And overall, the 3 profitability ratios have similar fluctuation. The ratio altogether decreased significantly in 2019 and decreased dramatically in 2020. And this section will analyze these changes for return on equity ratio and compare them to 2 other firms in the same industry, which are Hoa Sen and Huafac. Compared to Hoa Sen and Huafac, the profitability ratio of Namkim in 3 years was lower. The ratio of Huafac and Hoa Sen firms was more efficient. However, the gap of these ratios was shortened over years thanks to the rapid growth in profit of Namkim in 2020, which will be illustrated in the next slide. In 2020, the steel industry benefited from raw material price and gained profit by exporting to China, and Namkin was the most successful firm and gained a huge profit in this stage, which were reflected in the trend of profitability ratio. The year 2020 marked an important milestone of Namkim when its earnings increased dramatically, which were nearly 500% compared to other companies. And next, my friend Han will continue with the efficiency ratio. Thank you.
So to continue with the ratio analysis, now I will analyze the efficiency ratio. Efficiency ratio is regularly used to measure the ability of the company in using its assets and managing its liability effectively in the current period or in the short term. So I will choose the three common efficiency ratio: assets, turnover, receivable, and inventory. So looking at the table, you can see that Tom Nam Kim total assets were able to produce enough revenue at the end of each year because like the total assets turnover ratio were higher than 1, around 1.5. So it is a positive ability for Tom Nam Kim to grow continually in the near future. However, we can see that it has decreased in 2019 and 2020. So they were not using its asset generate sales as efficiently before. So and about the receivable turnover ratio, Tom Nam Kim in 2019 was slightly decreased compared to the 2018. However, we can see that in 2020 it decreased a lot with a higher percentage, about 33.49% compared to the last year. So this shows that Tom Nam Kim has having problems with affect its ability to effectively collect receivable and debts from their customer. So they are in a negative financial position and they need to take it seriously. And about the inventory ratio, in 2018 it higher than 2019, about 10.27%. So Tom Nam Kim was managing its inventory properly in 2019. However, they cannot keep this ratio stable or grow because of the COVID-19 and they have to face a decline in the inventory turnover ratio in 2020. So now I will compare the three companies, Tom Nam Kim, Hoa Sen Group, and Hoa Phát Group. As you can see that the total assets turnover ratio of Tom Nam Kim and Hoa Sen are like higher than 1, but Hoa Phát is lower than 1. So Hoa Phát need to take it serious about their total assets turnover ratio. But when we look at the receivable turnover ratio, we can see that Hoa Phát increased a lot in the receivable turnover while Tom Nam Kim decreased and Hoa Sen keep it stable. So now I will move to the conclusions of the presentation. So in the nearest 3 years, Nam Kim total assets liability decreased, and in the comparison with Hoa Sen Group and Hoa Phát Group, Nam Kim had lower net income, cost of goods sold, and revenue. That means that in this market, they need to compete more with a lot of strategy to grow in the near future. So, however, there is something very interesting that in 2020 is a difficult year for the steel production industry in Vietnam and Tom Nam Kim. So that affect the domestic coal consumption and the export operation. However, Tom Nam Kim can still keep its profit after tax about 295 billion Vietnam dong in 2020, the highest in the 3 years of them. So here are the only resources that we have used. And thank you for listening.